growth there. We've seen previously cost cutting very much helping, but also exposure to emerging markets, some of those US-based multinationals. Is that going to be another theme, or is that one bit tried and tested?
Yeah, well, I think the Alcoa result really highlights what might be a major theme of US reporting season, and that is majorly watered down expectations. And because of this, I think we should be focusing less on how many companies are beating their expectations in the market and really focusing on who is actually growing profits, who's actually growing revenues, who's going to be the guidance outlook statements, if there's any further downgrades to future earnings, and also the tone of the outlook statements coming from the companies. If we take Alcoa for an example, I mean, earnings met expectations, 6 cents per share. That's what the market was expecting. But if we look less than 2 months ago, the market was looking for 8 cents a share. So in the space of 2 months, those earnings expectations were downgraded around 25%. And I think a lot of other earnings across the US S&P 500 companies have also been downgraded significantly. So as I said, I think less focus on the actual beating or missing of targets and more on who's going to be able to grow their revenues and be able to grow growth through 2013, because as Peter mentioned, at the current levels on the S&P 500, it is expectations of pretty good earnings results. So Alcoa in particular, we saw Alumina, which is the ASX listed company, rise around 2.5% on our market yesterday. As you mentioned, it's come out of the blocks earlier, higher this morning as well. Of course, it's the flow-through effects from the Alcoa result expected in alumina. It does have a 40% stake in that Alcoa Worldwide Alumina and Chemicals. So I think 98 to 99 cents for alumina shares on the ASX was a bit of a resistance point as well. So if it has broken through that this morning, that's a positive.
Piper, your thoughts on the session today? You mentioned alumina jumping out of the blocks. It's up almost 4% at the moment. You've got Rio up about 0.4, Fortescue up about 0.9%. BHP mildly negative. Look, where are you watching today?
Well, I think obviously the mining sector is going to be a focus today. First of all, we do have the Alcoa result coming out to drive the likes of alumina. But then, as Peter mentioned, we saw that huge rise again in iron ore prices, up over another 3%, almost at $160. So the iron ore space will certainly be in focus, and of course the even big diversified miners, BHP and Rio, have large amounts of earnings in iron ore as well, so they're going to be benefiting from a higher iron ore price. We have seen iron ore miners over the past few sessions pull back a little bit. I think there's speculation this run in iron ore price isn't going to last. We've certainly heard it from some of the CEOs and the leaders of some of the big corporates, but certainly we'll be watching the miners today. I think the retailing stocks will be another sector we'll watch on the market today. We've got retail sales figures released for November. Market looking for around 0.3% increase, which isn't anything dramatic. It's a slight improvement over the past few months where growth has been either flat or only very small amounts of growth in the retail sector. But I think this will be interesting because the retailers have had a pretty good run on the market over the past month or so. So we'll be looking for some retail sales figures to try and back up some of that performance. But there has been some better sentiment in general within the retailing sector. On the ASX 200, we're seeing have seen a little bit of a pullback over the past few trading sessions. I don't think we're going to be seeing any dramatic sell-offs. Any sort of pullback in the market, I think, will then be supported again by investors coming in and buying the dips. So we'll be watching a few key levels there, but I think the market still looking pretty good, trending higher. Certainly the iron ore and miners will be in focus.